Hello guys, what's good and welcome to the Elevation Lab. I am your host, Rix the Billionaire. Again, this is a platform where I get to post content that's meant to elevate you in all aspects, spiritually, physically, mentally, everything about growth. On today's episode, as I promised on the previous episode, I'll be speaking about, or rather, I'll keep on teaching about financial markets, and this session is meant to teach you more about. I'll introduce candlesticks to you. I'll also get to introduce to you how you get to profit. That's how to calculate, or rather, how the market moves, and also how to profit from it. Yeah. So without much further ado, let me just go ahead and share my screen for you guys to see. Yes, my screen shall be sharing in a minute. Again, I know if you're new, maybe you've been asking yourself what you're about to see, what really this is, or maybe you've even come across this type of graph and you've been questioning yourself, trying to figure out what really this is. Yeah. Let the screen share. Yeah, maybe you've come across such stuff and you've been questioning what really this is. Yeah, and again, I know it's always difficult every time you get to see something new, but again, it's just because of lack of knowledge. I assure you this is the easiest thing to interpret, and these things which you are trying to question what these are will make you a lot of money, to help you fuel your dreams, to help you fuel your passions if you stay committed long enough. So these are what we call candlesticks, and basically what a candlestick is, a candlestick is simply a type of price chart that is used in technical analysis, and it basically displays the highest point of prices, low prices, open, I'd say the high, low, open, and closing prices of an instrument for a specific period. And candlesticks are used to represent price action in the market. Yeah. We also have two types of candlesticks, and one represents the presence of buyers in the market, because again, in the forex market, it's basically about buying and selling. One type of candlesticks represents the presence of buyers in the market, and we also get to learn about another type that represents the presence of sellers in the market. For buyers, we'll call that demand in a business term, and for sellers, we'll call it supply in a business terminology. So a candlestick that represents the presence of buyers in the market is referred to as a bull candlestick. I'll type it quickly. Again, this session might be slightly long because it's a bit technical. Yeah. So yes, I hope you'll watch it to the end, or rather, if you really want to learn, just go ahead and watch it, and you'll get so much of value from it. I don't believe I'm able to add any text with the drawings. Okay, this is referred to as a bull candlestick. I wanted to type bull, and bull. Why bull? Bull from the animal, from the animal bull, bull. That's what we call a bull candlestick, or rather a bullish candlestick. This is a candlestick that represents the presence of buyers in the market. And again, we said a candlestick will represent the open, the highest prices, the lowest prices, and even the closing prices at a particular time frame. So currently I'm on the 4-hour time frame, as you guys can see. So this simply means all these candlesticks that you are seeing, every candlestick represents 4-hour time. This is for this 4-hour, this 4-hour. So I want us to focus on this long candlestick here. this is a bullish candlestick. Why? Because if you look on this far end, this right hand, you're able to see some prices here. And this is what we are saying, a candlestick will represent price action at a specific period of time. And wow, this machine, it's really believe it's lagging, but again, really cooperate. So you see this flat base here. We have a flat base here. If you guys can look closely, let me just zoom in for you guys to see. Just let's give it a second. It's lagging, probably because I'm screen recording, because I don't think I have a lot of programs. This is what you're looking at right here. You guys can see we have a flat base here, and this flat base, if you look at the right side, you're able to read a price which is 28,955. So that's basically the open price in a bullish candlestick. This lower flat base represents the open price. Then you can see in a candlestick, before we proceed, we have the body, this part here, this part here, come on, that part, it's referred to as the body. And then we have these sticks here, they are referred to as the wicks, W-I-C-K. So we have the body and we have the wicks. Yeah, so let's go on. So this was the market open. Then we had some sellers, some presence of sellers. You see this most bottom part, you can see there's a tail. Let me call it a tail. This bottom price, which is 28,915, signifies the lowest price at that particular time. Then buyers came in to push the markets all the way up to this place where we have this wick, and that was 30,104. As you can see, price is going up here. That simply represents the presence of buyers in the market. Then that was the highest price at that particular time. Then this flat top here represents the closure of the 4-hour candle. So that was where our 4-hour came to an end, and that was the closing price. And the next candle open. This was the open, this was the lowest price, the highest price, then the closure. Again, the open, the lowest price, the highest price, then the closure. And that right there is the anatomy of a bullish candlestick, or rather candlestick that represents the presence of buyers in the market. Yeah. The other candlestick that you need to understand is the bearish candlestick, and this is a candlestick that represents the presence of sellers. Mine are black. You'll find other people have theirs red. Also we have people who have, you have different colors, all based on your taste and preferences. Again, this is a bearish candlestick from the animal, from the bear, and this simply means this flat top here, this was where prices, this was the opening price, which was around 30,002. Then we had some buyers come in, push the price all the way up here. You can see there's a tail here. That was the highest price at that particular time, which was 30,073. Then sellers came all through, drove the prices down below. You can see we have a tiny wick. If you guys go on to understand price action, you really understand there was so much selling pressure at this particular time. So yeah, you can see this lowest point here, this tail here, this was the lowest price, which was 29,451. Then the closure of the 4-hour, and we had another 4-hour open. This was the open, the highest price, again the lowest price, then the closure. And that simply represents the presence of sellers in the market, and we call that a bearish candlestick. The other thing that you're going to speak about is how the market moves and how you get to profit from this market. Anytime we speak, and with that, I would really want to cross over to currencies for us to be able, because I know most of you, when starting out, you will definitely start out as currency traders. And with time you'll really get to understand why. Yeah, so I'll just use currencies so that I may make it better for you guys to even learn. And I'm going to use the GBP USD. I used to trade this a long time ago, but this wasn't my favorite at all. So I'll use this chart, the pound US dollar chart. Again, I can now show the drawings so that you may make any drawings, because I believe I don't have any markups here. So anytime we want to measure the movement of prices in the market, let's say for instance, if we were to take a walk, yeah, you'd probably say today I've walked 3 kilometers, or you can even go even narrow it and measure it in steps. You can say probably I've walked for like just give me a moment. Let me pause this. Okay, I had a call come in. Guys, just give me a moment. Let me pause this. Oh, let me pause the recording first. I need to receive a call first, then just give me a minute, kindly. Just give me a minute. Come on. Pause. Sorry for the inconvenience, guys. I was on a call. So again, as I was saying, just the same way you can say today I've walked for like 50 kilometers or even 50 steps. The market movement is also measured in the same way, and the market movement is measured in something we call PIPS, PIPS. And PIPS, this is a short abbreviation for percentage in points. So let's say for instance we were to take a buy. I'm going to show you guys how to calculate PIPS, and also how to understand profiting from the same. And then that will be it for this session. Then the next session we shall be tackling, we shall be diving slightly deep and start studying about market structure. So let's say for instance we took a buy position from this area. I'm going to use an horizontal ray to indicate a price. Let me make it black for it to be slightly visible for you guys. Let's say we took a buy position from this point here, then exited at that point there. So anytime we're speaking about a PIPS, a PIP is basically the fourth decimal place. Yeah. Anytime we're speaking about PIPS in currencies, the fifth is basically a PIP. Sorry, is basically the fourth decimal point, with an exception of the Japanese yen pairs and gold. Why? Because they have three decimal points. Yeah, and I'll also show you how you can calculate PIPS on the same. So let's say for instance we took this entry, we bought at, I'm going to do a little math here. Let's say for instance we took a buy at 1.11205. that was the buying price. Then we exited the position at 1.14059. Let's call that the exit price. So basically what you're going to do, you're going to do a little mathematics. Of course, you're going to subtract this, that is 1.14059, subtract 1.11205. Yeah, I believe it's 11205. Then let's see what the answer is. The answer should be, I'm going to use a calculator, 1.14059 minus 1.11205, and the answer is 0.02854. Yeah, so I said earlier that a PIP is basically the fourth decimal place. So what you're going to do, you're going to move this point from where it is here 4 times, just to be able to know how many pips this market moves. So the first point, 2, 3, 4. So this simply means our decimal point now will shift from, let me put it, will shift from this place to this area. So this simply means we had a market movement of 285.4 pips, and we can ascertain if this is true because again, you don't really have to calculate this manually because you have tools to help you do so, but it's really important for you to be able to understand how to. So I'm going to use the price range tool. The price range tool, this is a tool used to determine pips. You can also use a ruler if you want to measure market movement. This platform right here, it's referred to as TradingView. So I'll place it from this point just to confirm if we are right. And you can see we had around to, I've not placed it precisely on the prices, but again, you can see it's around there. So yeah, the market moved by 285.4 pips. Let's take another example. Let's take a selling example. Let's say we were to take a sell position from this point here. Let's say we took a sell position on this retracement here, on this area here, and exited the sell position here. So our entry point, or even the entry price, was 1.13429. That was the entry price. Selling price, let me call it selling price. Then we exited at 1.11205. That was our exit price. So again, we're going to do the same mathematics. That is 1.13429, then less 1.11205, and we have our answer, which should be 1.3429 minus 1.11205, and the answer is 0.022. So again, we're going to do the same thing. We're going to move the decimal place 4 times. That is the easiest way to understand how to calculate pips. So 1, 2, 3, and 4. So we are going now to have our decimal point right there. So this simply means the price at this particular time we had a 222.4 pips move. So again, it's really important to understand how to calculate pips manually, but you don't really have to do it manually because we have tools that can help you do so. You can see it's right here. It's almost 222 point something. So this is the accurate, because from here I'm not using like the accurate figures like we've done here. So again, that's how you get to calculate pips. I'm going to show you how to calculate pips on JPY pairs, and the same, I believe it's what you can do on gold. So I'm going to use like a pair like Euro Japanese yen. I'm going to show you this using the Euro JPY and speak a little bit on lot sizes, then we shall be done for this session. Again, as you can see, we only have like 3 decimal points here. So how do you get to calculate a pip in this? So let's say, for instance, I'll begin with the sell example. Let's say, for instance, we took a sell position on this retracement here and exited. Let's say this was our target point, our first target point. So again, I'm on the 4-hour time frame. So I'll say my entry price is, I'll call it a selling price 143.368. That will be selling price. Then 141.385. this will be my exit price. So anytime it comes down to JPY pairs and gold, now we don't move the decimal point like 4 times like we were doing on the other pairs. We move it 2 times. Move it only 2 times. So we're going to do this 143.368 minus 141.385. The answer should be somebody who is doing it already. Let me do it for you because I'm only recording this session. I'm alone in this session. 141.385. So that should be 1.983. So I'm going to move this point only 2 times. So from where it is 1, 2. So now that's where we put it. So this simply means our market moved by 198.3 pips. That's how you get to calculate pips. Again, you can do this using the price range tool, just like that. You can see it's around 198 pips. You don't really have to calculate it manually, but it's really important for you to understand how to calculate it manually. You can also use the short position tool. That was your entry. Let's say your stop loss was there, and again your target was here. You can see it's 198.3 points. Again, it's all here. So again, you don't really have to do it manually, but it's really important to understand how to calculate pips. The other thing that I'm going to show you guys at the end of this session is how to profit from this knowledge. And I should not have deleted that, but let me just quickly go to the GBP USD chart because the markups still have the writing. Sorry, not really a markup. Okay. Okay, never good to save it, but again, it's okay. There we go. About something we refer to as a lot size. And anytime I'm speaking about a lot size, this is what I'm talking about. Don't know if I'll be in a position. Let's see. Okay, let me first define a lot size. A lot size, I simply define it as a order quantity. This is how I define a lot size. I define a lot size as the quantity of the order that you are about to place in the market. And again, the lot size will always vary based on who your broker is. Once you go to your MT4, sorry, not vary based on who your broker is. Sorry for that mistake. It's will always vary based on the size of your account, because you can only place a size of an order based on your account size. And we do have different types of lot sizes, and this is where you get to, like, when you go on your MT4 or MT5, you'll see like 1, -1, 0.01, such an area, and we'll get to discuss it. So we do have different types of lot sizes. We have something we refer to as a micro lot, and I believe this is any lot size beginning from 0.01 all the way to 0.09. Then we have a mini lot. A mini lot begins from 0.10 and runs all the way to 0.90. Then finally we have a macro lot. And a macro lot, I believe it begins from 1 all the way to infinity. And what this simply means, anytime you want to know the value of a pip, the value of a pip is measured in lot size. Yeah, a lot size of 0.01, simply means that one pip is worth 10 cents. How did I come up with that? By simply multiplying this by 10. If you multiply 0.01 by 10, we'll get 0.10. So 1 pip with the 0.01 lot size, this simply means 1 pip is worth 10 cents. If you took a position with a micro lot, which is a 0.01 lot, this simply means, let's say on this movement of 285 pips, this simply means 0.10 multiplied by 285. That simply means from this single position, you will get to profit. We get to make around, I believe, $28.5. Yeah, which is true. $28.5. Again, we always multiply by 10. Anytime we're speaking about a mini lot, which begins from 0.10, this simply means 0.10. This simply means 1 pip. 1 pip worth $1. Why? Because again, you're multiplying by 10. So from this same position of 285 pips, if you use the 0.10 lot size, this simply means you'll profit from it $285, and so on. That's how you do it. Again, the same thing applies to a macro lot that begins from 1. This simply means 1 pip. 1 pip is worth $10. Again, from the same movement, this simply means you get to profit $2,850 from the same move, and that's how you get to measure the market movement and also get to profit from the market. So again, I hope this session had value. I hope you got value from the session. I hope from now you're able to know what a bullish market is. And a bullish market is simply a market where we have like buyers in control. You're also able to know how a bullish candlestick, or rather the anatomy of a bullish candlestick and a bearish candlestick. And also you are in a position now to calculate calculate PIPS, yeah, and understand how to profit from them. So on our next session, I'll be doing market structure. We are now diving into the real deal. Yes, and if you found value in this session, don't forget to share. Don't forget to give me a thumbs up. And that's it for today's session. Goodbye.